Hello all of you. In this lecture, we will be discussing a concept which is known as beta value. So what exactly this concept of beta value is and how exactly it works. Actually, the term beta value was asked by UPSC in civil services preliminary examination few years back. Now this concept of beta value is associated with the stock market. And what exactly it shows, how exactly it is calculated. Actually, over the stock exchange, there are different companies which are listed. Now, the shares of all the companies may not be volatile in the same manner. So, the volatility may differ. And what exactly this volatility is all about? That what exactly is the degree of fluctuation in the price of the shares of a particular company. So some of the shares are highly volatile. They move at a very fast pace, whether it is upward in direction or it is downward in direction. On the other hand, some of the stocks, they are relatively stable and they move at a very slow pace, whether it is upward in direction or it is downward in direction. So with the help of beta value, it is measured that how volatile the shares of a company is, how volatile a particular stock is. Now, how exactly it is calculated? The movement of a particular stock over the stock exchange is compared with the index. In fact, it is the main index with which the comparison is done. For example, in case of India, it may be Nifty 50. So Nifty 50 is the most important index of National Stock Exchange. So Nifty moves at a particular pace and even the shares of different companies, they move at a particular pace over a period of time. So over a period of time, if the shares of a company, they move exactly along with the movement in the index, whether it is upward in direction or it is downward in direction, then it can be concluded or it can be said that the beta value of that share or the beta value of that stock is 1. So if the beta value is 1, it means that the share of that particular company is moving exactly along with the index. On the other hand, if the shares of a company, they move at a much faster pace as compared to the index, then the beta value will be more than 1. Such stocks are termed as highly volatile stocks. For example, over a period of time, if the index moves 1% upward in direction, but the shares of a company moves 2% upward in direction, so the movement is more than the movement of the index. So such companies will be termed as a high beta stock. They will always have a beta value which is higher than 1. Similarly, if a high beta stock falls down along with the index, the fall in the index will be relatively less, but the fall in the price of the shares of that company will be relatively high. So whether the movement is upward or it is downward, the movement will be much faster as compared to the movement which can be seen in the index. Such companies or the shares of such companies, they are termed as high beta stock. It is a possibility that the beta value of a company or the stock may be even in a negative. It happens in those situations where the index is moving upward in direction, but the share price of that company is moving downward in direction. So it is moving in an opposite direction. So normally what exactly happens that when it is a bull run, when the market is bullish, when the sentiment is bullish, The investors, they prefer investing in high beta stock so that they may get a return which is higher as compared to the return given by the index. On the other hand, if the market is bearish, if the market is continuously falling and the sentiment is bearish, then in that case, we should always prefer a share, we should always prefer a stock which is low beta, because it will fall down relatively less as compared to the fall in the index. So this is beta value, which shows the volatility of a particular stock in share market, in stock market. Thank you.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.